The 5 and 30-year Treasury yield invert for the first time since 2006, fueling those recession fears. You can actually see the yields across the board here. You can just see how tight they are getting. That means that the curves themselves are continuing to flatten and heading closer to inversion. The 35 actually closed at 0.03, but it did invert intraday. And the 30 and 5 is something we actually talked about back in October. You can see the spread here is actually way above the inversion line. But we wanted to get ahead of that. I mean, you can go watch that video. I'll link it in the description below where I get into a little bit more detail there. But one thing that no one's talking about yet is we're about to come into quarter close. And quarter close is where we typically get some end of quarter markups, and you typically see some interesting price action, which we are getting here. Now, one thing that I haven't heard anybody talk about is we haven't actually had a quarterly close on the yield curve being inverted, being the 30 and 5. On a quarterly basis since late 1999. Take a look at this chart here. Very interesting. So you can see we're right here at 0.03 and the quarter is about to end. Are we going to close for the first time, if you look back to the chart, since late 1999 to early 2000, are we going to have a quarterly close at inversion? And what happened there shortly thereafter? Well, we had the dotcom bust. Now, what I found interesting was I was just looking at the price action leading up to the inversion. You can see the curve flattening here at a steeper rate. And you can see it was a big bullish green candle. Then we had this hanging man hammer candle, kind of like a blow off top. And you can see something very similar here. Big green authoritative candle. And what's crazy is this is a log scale chart. All right, it's a log scale chart, but it's still a pretty large size candle, even looking back here throughout history. And then you have a nice hammer candle here, hanging man potentially forming there. Does that mean that that's going to top? It's going to play out like 2000? That's not what I'm trying to say, but it's interesting, that's for sure. Now, if we take a look at the Fed watch tool, what's going on? Well, if we look at the 14th December meeting here, what is the market pricing in as rate hikes? Well, the Fed is going to be very aggressive is what the market's pricing in. Is that really what's going to be taking place? I don't know. But if you just add these together, 40, 50, 60, 63, 64, 65-ish percent chance that we're going to be above 2.5. So that is what the market's pricing in. So you see these yields moving very high, causing a lot of volatility in various different assets. We're seeing oil go back and forth. It was down 7% on the day. You see the dollar start to break out. This is something that we've been tracking. Meanwhile, the S&P 500 continues to perpetuate to itself to the upside. And I want to talk about something very interesting I noticed here on the S&P 500. Momentarily, if we take a look at the 11 sectors, today what happened? Well, consumer discretionary led the way, mainly by Tesla. Technology did very well too, up 1.19%, led, which looked to be Microsoft, and Apple continued its run up. And then energy obviously hit hard because of oil. If we take a look at Tesla, you can see here, we were talking about this on the last brief, basically said I wouldn't be surprised, or I would be surprised if it continues to perpetuate upside. But then I said, actually I wouldn't be, as the price action was getting very tight and Tesla is known for its gamma squeezes. Well, that was one big move because of what? Well, pretty much a nothing burger of news. They're going to have the stock split, but apparently that's a bullish for the market. If we take a look at Apple, another day that it is up, that makes it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days up. Is Tuesday turnaround Tuesday? I don't know, but that was a big gap down, and then we closed at the high of the day. So pretty crazy price action overall, to say the least. And if we look at Microsoft, it was up 2.31% on the day. And to be quite honest, it looks like it's breaking out of a nice little pocket right here, which could perpetuate further upside. And it did have some nice volume to support that move. So we'll see here if Microsoft's moving up, because Microsoft's a big player in the obviously tech space, but it's a big mega cap stock, so can hold the S&P 500 and the NASDAQ 100 together if it wants to continue to perpetuate itself higher. AMC was another one that just ran like crazy. I caught this one intraday, shared it with this was actually the only trade that I shared intraday today because the price action was just all over the place. But the 5-minute time frame was putting in a nice little VCP pattern. And this was already after the fact that the prices ran up 30%. So I said be mindful for risk, that's for sure. But you can see here we popped off even further, melting up towards the end of the day, which is another 10% for the stock in the matter of a few minutes. That's a 5-minute time frame. You can see here looking at the daily time frame on AMC. Let me bring that up. Just a massive breakout here on some extremely intensive volume. Just crazy day, up 44.91%. So these heavily shorted stocks are getting the squeeze on, that's for sure. Let's take a look at the SPY. This is what I find kind of interesting. The last really 12 trading days, the daily candle has been closing like right on spot to the high and or to the low. And you can see that like there's one here, we close right there basically at the low of day. Right here is basically at the high. That is the high, that is the high, that is the high. That's almost the high, off a little bit. Almost at the high, that was at the low, that was at the high, and another one at the high. So during the process of all these candles, you're seeing some massive volatility swings going back and forth. So something's very screwy here. We definitely can see a potential push further, right? The risk range brings us up to 462.50. I think on the last video we said, basically closing at the high right here. Can't be surprised if we get another high, higher low. That's exactly what we got. What can we see here? Well, we close at the high again, so potentially another high, higher high, and higher low. So that's kind of just the path of least resistance is what I'm seeing right there. Now, I did find something interesting here on the VIX, the volatility chart. We did close this gap today, and we have one more gap that is directly beneath us, and we did close just under that 20 level, which we haven't really had a successful close under there. Just looking back through the chart quite some time, it was like about 2.5 months ago. So starting to see that take place. You can see it's getting a little overextended to the downside via the RSI, but we'll continue to monitor that. If we take a look at the 15-minute time frame for the S&P 500, clearly it's getting overextended once again. This market keeps on perpetuating itself up. You can see while it's moving up higher and higher, momentum has just been weakening. So perhaps we can potentially break out of that, and then it continues to perpetuate up. Right? We have 462.50 for that upper risk range, and we have this gap above us that could, and it should be a little bit lower. I drew that poorly, which is basically actually should be right around 462.50 right there. So if it comes up there, that could add to the confluence area of resistance. If we take a look at the BP-SPX chart, this is why I'm still not going long or chasing this by any means. I'm just being patient, waiting for the opportunity to come. BP-SPX chart overextended still continues to be. That's one of my signal charts here. Industrial average also. This is for the INDU. Overextended in that area. BP-NDX continues to hold there too, as well as we still see strength come in. And then the BP-COMPQ, which is the NASDAQ composite, also in that overextended area. It's just below it, but it's just right about there. It's at 68.92 when it's considered overextended or overbought according to the RSI, 70. Okay, and if we take a look at the Qs, daily time frame closed at the high of day, and we're not too far off from the 200-day moving average, so there's no reason why this can't extend, have another higher high, higher low, especially with the look at Microsoft, so we'll keep continuing. I still think 370 is going to be that area of previous resistance, and you put that into confluence with the 200-day as well as the upper risk range. So if we do get up there, that could be a potentially good short opportunity to try to see if we can catch a pullback down to either see it flag and or pull back even steeper, right? We're coming into the third quarter, or so this is the second quarter here. So I would expect to see continued volatility in the markets. If we take a look at the 15-minute time frame, same thing goes with the PMO. Still heading lower as this has been heading higher. RSI is getting pretty burnt out right here, and we have one gap above us that's in confluence with that upper risk range, so that could act as an area of resistance. All right, let's take a look at one other signal chart here too. This is the Nizzi-McClellan oscillator. You can see here we're just higher, or is a high, lower high, lower high. The New York Stock Exchange is putting in higher highs here too as well. So that's clearly a divergence. We've called it out here before, and it played out to the downside. We called it out here to the downside. We call it here, played to the downside. All right. So these aren't something to just ignore and then just chase the hype. These are something to be mindful of and pay attention to. Does it mean that they're 100% accurate? No, it doesn't mean that, but it tells us one thing. It tells us that this move to the upside, momentum and the strength of it is weakening. Okay. That's what that's telling me, at least. All right, let's get into crypto. Sailor to shift ratio, everybody. It did it again. We crossed through that zero marker. We got through the high of the previous week, and kaboom! We started moving up higher. Maybe some people front run the signal, maybe in some crypto equities. Maybe you're taking some profits off the table. Congratulations if you are. So far, it's still above that zero marker, so all is well as it stands right now. I'm in a position. Part of me is like, man, should I just take a little bit off right here? But I'm just going to, because of my positioning sizing and how I use this strategy, I just wait till the next sell signal. All right, I don't get too crazy. If we take a look at Bitcoin, it did break out of this downsloping trend. I want to point out that it is running into that 200-day moving average and acting as resistance. We said to keep an eye on that. Keep an eye for a potential pullback, right? And a back test, right? Come down to back to around that 44,000 marker and see if it does hold. And if it does hold, that could be a very, very positive sign for the price of Bitcoin to get back above that 200-day moving average and start heading higher. It's not there yet, but we are seeing some strength, so that is a good sign. Take a quick look at Ethereum. We have not touched the 200-day moving average as it stands right now, but we are seeing some strong movements. Really, since the 14th of March, it's kind of moving with the markets overall, the tech stocks. So big, strong move over there, breaking out of this downsloping trend line, and we have the RS strength line, relative strength line between Ethereum and the S&P 500, getting back above that 50-day EMA too as well. Well above those moving averages here. So a back test, definitely plausible, but it just has not pulled back yet, as well as the markets. I want to go ahead and wrap this up in the conclusion and talk about just two other charts here. The old full indicator right here, the green line crossing above the blue line, that's technically a buy signal. The last time we had a buy signal was right here, and you can see we had a high, a lower high, and it ended up going sideways a little bit, and then crossing back down and heading over. So this is a positive move overall, and I mean, it's coming after a very, very strong indication that can potentially get a little bit of faded here. But I did want to call out we have a very similar situation where we have a high and a lower high on the relative strength line between the NASDAQ composite and these could put to call ratio. Okay, so good move overall. I'm looking for some sort of consolidation. This is not anything that I want to chase up into like the crowd, but like I said, like stocks like Microsoft, right, is showing some strength on the NASDAQ. Could very well perpetuate itself higher, but as it stands right now, let's pay close attention to what's going on in the markets. Right, we have we have lower highs and we have lower lows as it stands right now, and we've just had a massive, massive rally. So we just need to be patient, and that's pretty much it here. If we take a look at the CPC, you can see here that was that buy signal. I'm still ignoring the buy signal as of now, but the market has perpetuated up. The one that I did not ignore was the Sailor Shift tool, so that this keeps perpetuating higher. So if you got to catch a lot of this move, now the reason why I ignored it and didn't press too hard, I should probably clarify this, is I already had some long positions on, and I was adding some long positions, but I wasn't fully 100% cash, or 100% long is what I'm trying to say here. So I've been actually on this move up, scaling back some on my longs and adding now to my shorts a little bit more to see here if we have a correction. So I need some sort of a pullback consolidation so I can start adding more inventory to my long positions. All right, everybody, that's all I got for you on today's episode. Hope it helped out. Hopefully it gave you some insight, and I'll see you back here on the next Stock Market Brief.